Alright, hope everyone's doing well this evening. So, I wanted to discuss kind of thoughts I've had recently about Al's course and the very best way to learn how to trade. And when I mean learn how to trade, I mean every category with trading. And, it takes me back to his first video course, the one he originally wrote or created back in 2012, whenever it was, and just the format. And I started thinking to myself, I was talking to someone about what's the best steps, what makes trading difficult for people, and aside from the obvious, lack of knowledge or things like that, or they just don't understand what's going on. Take Al's course. A lot of people, I'm sure there's many people who've studied Al for a long time and they never make it. And one reason is, in my opinion, their lack of understanding through here. So this is a template of Al's video course, and all I can say is if you haven't purchased Al's video course, then, you're really hurting yourself. It's the best course I've seen, and it's very clear, very concise. It's, really, really well. And just to tell you from the get-go, the way I'm studying it is, my plan, I'm working on it as we speak. Take every video and just learn every minute, small, the littlest thing he says, and learn it and fully understand it. And then move to here, fully understand his videos. And I mean not watch them, but fully understand them. Fully understand the Forex, fully understand the setup, program trading, and go all the way down. See, I think most people, and I believe this just because I think it's human nature, and I've done it myself in the past many, many times, is we watch them, but we really want to get to these, how do we trade, how do we make money, and we skip the basics. This goes back to, I know I've said it and I've coined it from Al, but Al said in the past, trade management is the most important thing in trading. And it is and it isn't. Because if you don't understand the fundamentals of price action, you can really screw up management. Let's look at today. Let's say I buy or I sell all the way down here. Okay. Let's say I sell this close. And I think, I'll sell more here. So I'll sell here, sell here, sell here, and sell here. And, I'll make money. Well, I do that, and then price pulls back. And then look, bull bar. And instead of getting out, I just hold and I keep selling. Yeah, if I hold long enough, I'll probably get out of break even. But is that really the best way to trade? Probably not. And, so first and foremost, I think there's three key ingredients to trading, and that's understanding the market cycle, which is everything to do with context, trading ranges, trends, channels. How do you read it? What are the characteristics of each? What's a small pullback? What's the characteristics? What's the key features? What's the key features in a trading range? In essence, it's video 1 through video 29, if you want to get technical. So, and anyways, I think there's three features. There is, and I'm going to give you video for each one of these. First is discipline, and that has to do with that has to do with personality traits of successful traders. The discipline to do the right thing. There's two things he talked about, and that is taking a low probability trade that you otherwise wouldn't, and another one was, getting out when you're wrong. So that'd be discipline. Second is the market cycle and the context. So in other words, at this point, bear breakout, I'm thinking, we're probably going to be in a bear trend or a trading range. So, the market's either in a trading range or a bear trend. So I need to look to sell, and it's better to sell rallies. Bad follow through. Well, close to the moving average. This may be more of a trading range, and it's possibly a broad channel. More bad follow through. Well, gee, the bears have had a chance. This is probably a trading range and a broad channel. Bull breakout. Well, we're pulling back. Unless the bears, this is still probably a bull channel, broad bull channel, or a trading range. Probably not a bear trend, so it's better to buy. Strong bull breakout. Maybe more of a bull trend, but still, it's probably a bull trend or a trading range. Probably not a bear trend. Here, clearly a trend. Buy for any reason. Here, buy for any reason. This looks like bears made money on a stop, but again, probably a pullback, and best case for the bulls, it's a trend. Best case for the bears, it's a trading range. Therefore, it's better for me to buy low, and I want to be careful about selling. We're starting to go sideways for 20 bars. Al says when the pullbacks go sideways for 20 bars, they become more trading ranges, and in general, there's a 50-50 chance. So, I still think, the best the bears can get, it's a trading range. They probably won't get a bear breakout, so it's better to buy. But, this isn't good, and, either it's going to be a bull trend or a trading range. The bulls had a chance at a more trending up by the close rally late in the day. They couldn't get it. They got bad follow through. Probably a trading range, so probably better to get out. Call it a day. What I did there was discuss context, in general as discussed in the market cycle. But there's many factors to that. So here's how I would study the video course. And, it's going to be the honest truth. I think it's the best way, and I think it's going to be the most boring way. And, or fascinating. Depends on your perspective of trading, I guess, in a way. But honestly, if somebody sits down, I won't say everybody, but I guarantee you, if we sit down and we watch terminology, and we watched it together right now, we would both find, whoever's listening to this later on, we would both gather something from that video. Even if it's the 10th time to watch it, something small. And it might be just very, very minor, but it's something. So fully understand this, then fully understand that. And here's why that's important. So let's walk through this real quick. And I know this seems obvious, but it's, I think it's something that Al intended, but it's just, we forget it sometimes, and that is, terminology. You got to understand the basics. You got to understand a minor reversal versus major reversal, a swing versus scalp, all that good stuff. You got to understand the basics. And then chart basics, price action. He talks about why is there a market? Why do we have a housing market? He used that as an example. And, I'm not going to go into detail about these videos because you should watch them on your own time. And, don't take my word for it. Watch it yourself. But he talks about why there's a market and the whole purpose behind price action in a market. The reason you need to understand that is because it shows why there's no perfect trade. So one can move further in not trying to find the perfect setup, and instead trying to, accepting that there's a small edge. And that gets into the whole 90%, the bulls and bears can make money, all that. Forex Basics, it's Forex Basics. I'm not going to go into detail about that. Our setup, pretty explanatory. Program trading, why do computers control the market? Algorithms, all that stuff. Personalities, traits of successful traders. Why traders, traits, discipline, and take each one and just really learn it and really understand it starting out. Why, he talks about focus on volume and not the number of trades, all sorts of stuff. But just take your time and watch each one instead of watch, skip around, watch the good stuff. Because, even right now, I know there's scaling in, there's how to trade, there's, a video about swing trading and scalping, and, all those videos are great, and they're really helpful, but at the end of the day, I kind of found myself thinking, gee, do I really understand, I was watching pullbacks the other day, and I've been missing a key feature in pullbacks, and, I only watched video 9A, that's the only one out, and I watched it, 3 or 4 times, and just really let it sink in, something I was missing, and it just really helped. So I'm going to keep it short. I highly recommend anyone who has the course, number 1, get it, and number 2, take your time. Just watch each video one by one. And, if you're on, chart basics and price action, and you watch it and you think, and when you watch it, really understand it and really understand it well, and then move on to the next one. And, do that. Don't be like, oh my gosh, I need to hurry up and watch these. Spend, if you have to, watch each video 3 or 4 times. But, I promise you, the more you understand, if you can understand the first 10 videos, if you took, 3 weeks or 2 weeks, however fast you could do it, and you watch the first 10 videos, and maybe you watch them just a ridiculous number of times, 10 times each. You watch, so you watch each video 10 times. And I'm sure, that's an extreme number of times to watch each video, but, hey, maybe you watch it 5 times. Watch it over and over and over, and just keep going all the way down, all the way down, all the way down, all the way down. If you did that instead of watching, if you watched each of these videos 10 times, instead of watching each video 1 time and watching every single video, I guarantee you'd be better off than the other person, because, you have to take it in stages. And this goes back to the main point. Most people mess up, in my opinion. People talk about they do well and they start doing bad, and it's frustrating, all this stuff, and it has to do with their lack of understanding something small. It's always, that's really the best way I can put it, is it's something really, we get frustrated because, I honestly kind of got to think about it, because, it makes complete sense in my head, but I've never really tried to explain it this way. Think about, here's the best example I can give. The better we can understand the foundation of trading, this is the why to everything. Why is price going sideways? Purpose of a market. Why, why do these, the why to everything. And I hope that makes sense. You can have all the discipline that you want, but if you don't understand context, if you don't understand, why it's not a good idea to buy the low of this bar. Well, I say it's okay if you can buy and buy more lower and scale in, but why it's okay, not a great idea to buy this close and get out here. You're going to be better off. So, you can have all the discipline you want, but if you don't fully understand, all of this, it's not going to help you. You can understand how to draw channel lines all you want, but if you don't understand the purpose of a channel and why a channel is a channel in the first place, and the logic and what's happening in a channel, it's not going to help you. And I'm not saying that to pick on anyone who draws channels. I think that's a great thing to do. I'm saying that because it's honestly just in front of my face. Same thing with breakouts. It's the same thing with, it doesn't matter. You can enter late in a trend. It doesn't matter where you buy, where you sell in this. It doesn't matter where you buy in that. If you buy this close and you're up here, well, guess what? Just because you have an open profit, it's still your risk and all those sorts of things. So that's all really I have to say. The biggest thing is, I challenge you to watch every video over and over and over and over and over and over. And, it's going to get I think it'd get boring, sort of. But take each video, watch it a lot. Move down, watch it a lot, watch more. Really understand it. It's, build a solid foundation of each video. And before you know it, if you do that, next thing you know, you're going to be all the way over here, and you're going to say, gee, I've watched all these videos, 10 times each, and, I understand all this stuff really well, and all of a sudden, this part becomes easy. See, it's easy if you fully understand the market cycle. The rest is pretty easy if you think about it. Look over here. It doesn't take much to say, gee, if I sell, this is a strong breakout. If I sell, I'll probably make money. Gee, this looks like a minor reversal. Maybe, it's probably not a bull trend, so it's probably either a bear trend or a trading range. If I sell and put my stop way up here, it's a trading range, will probably test down, so I'll probably make money. Or, gee, this is a lot of bars down right here. If I just sell with my stop up here, the bulls probably need a minor reversal and then a retest down before they can even get a major reversal. This isn't enough. These are minor reversals. This is disappointing, but they still probably need a retest because it's not a bull trend probably, and at best, it's probably some sort of, it's a bear trend or a trading range, so I'll just sell for any reason. Gee, if I sell here, put my stop way up here, guess what? Tighten up channel, probably just going to be a minor reversal. If I sell here, scale in, this is disappointing, so maybe I'll get out here, but otherwise, it's still, it's probably more likely going to be a trading range or a bear trend. Or, gee, if I sell here, stop up here, maybe I'll get a major move down. It's much easier to understand this. You have to have a foundation to understand this. Understanding scalping, you have to have a foundation of this. So that's all I've got for you. Feel free to comment below if you have any questions. If there's something in, if you have the video course, and if there's some, video, let's say in starting out, or, pick a video. If there's a video where there's something you're kind of confused about, email me, or, my username's BCWOLFF, BC Wolf. It's BCWOLFF on BrooksPriceAction.com. Just send me a message and say, hey, I'm confused about video, 9A, pullbacks and bar counting. Al says, in 14 minutes, 38 seconds into the video, Al says such and such, why? And I'll try and get back to you. But that's the best way to do it. So, hope this helps, and thanks.